I'm here to give a short overview of SKAGEN Global in February. The fund had a good month in absolute terms and increased by over 2% in euros, although it underperformed its benchmark on a relative basis, which increased nearly 4% during the month. There were no new companies added to the portfolio or removed during February. We added to several positions and reduced our holdings in a couple of others, and the cash position at the end of the month was 7%. The portfolio is attractively valued on both an absolute and relative basis, with what we believe to be upside for the top 10 holdings, which together make up a third of the fund, of over 40%. SKAGEN Global is up nearly 5% year to date, which is slightly below its benchmark. Looking longer term, it has beaten the index in 14 out of 16 calendar years and delivered annualized returns of nearly 16% since inception in 1997, which is 13% ahead of the benchmark index. Looking at the drivers of performance year to date, a couple of US listed companies, Citigroup and Tyco International, who were among the best contributors in 2012, have continued their strong performance into 2013. Citigroup recently announced weak Q4 results, although the new CEO reiterated his intention to turn around performance through both cost-cutting and capital efficiency measures, while Tyco, the fire protection and security company, delivered strong results recently, which included an increase in the dividend. On the negative side, Chinese communications group China Unicom was the biggest loser. There hasn't been any negative news from the company, however, and we believe the investment case and earnings potential as the Chinese mobile market moves from 2G to 3G remains intact, and we've used the share price weakness to increase our position. The second largest detractor year to date has been the Latin American steel producer Ternium. The company released weaker than expected Q4 results, driven by lower shipments and higher operating costs, and the share price fell 14% in US dollars in February. Looking at the most important changes to the portfolio so far this year, two new companies entered the portfolio in January. Mosaic is a US fertilizer producer, which we think is starting to put a number of operational issues behind it that have been holding back the share price. The company is well positioned within its key potash and phosphate markets, which we consider to be attractive in the long term. The second new entrant this year was Chinese tissue paper producer Vinda International, which is the affiliate of another of our holdings, SCA. The Chinese market has huge growth potential, and we expect SCA to transfer technology and competence to Vinda International. One company, Pentair, left the portfolio after the recent share price increase meant the valuation started to reflect a high degree of confidence in the company's cost-cutting and restructuring program, something which we don't completely buy into. In summary, it's been a strong start to the year, and looking ahead, we believe the SKAGEN Global portfolio is attractively positioned with considerable upside potential. For more information, please visit the SKAGEN Global section of the SKAGEN website. Thank you for watching.